Good morning, traders. Welcome to the Phoenix Blue Daily Update, where we bring you updates about what's moving the markets and how we intend to trade these moves at Phoenix Blue. My name is Jennifer Talia. It's currently about 8:15 in London. Today is Friday, the 29th of September 2017, and I shall start by going through the key data that came out overnight and what else we have due out today. Please remember that all times will be shown in BST. Now, before I start, I just want to mention that if you don't currently subscribe to our YouTube channel, please click on the subscribe button so you don't miss any of our regular updates. Okay, let's start. So yesterday morning, we had the Bank of Japan's Kuroda give a speech at the National Securities Industry Conference in Tokyo. He basically said that Japan's current economic expansion was highly sustainable and that the Bank of Japan still expect to reach their 2% inflation target by the end of the fiscal year 2020. He also said there was no sign that quantitative easing, QE, had caused any issues in the financial markets. Now, bearing in mind that this is about the sixth time since 2013 that the Bank of Japan have actually pushed back their target inflation date, it's not looking much like their policy is working. However, he seems to be quite optimistic that companies raising workers' wages will help with inflation. So we'll have to wait and see. And mid-morning yesterday, we also had both Bank of England's Mark Carney and our UK Prime Minister, Theresa May, both gave speeches at the Bank of England's 20th year independence birthday party. Now, Carney's speech was a cautionary tale, saying that the Bank of England's monetary policy alone wouldn't be able to prevent weaker income growth and any fallout which was likely to accompany Brexit in the UK. And Theresa May then responded by defending the importance of free market trade policies and also stated that the UK government needed to mitigate the effects of the Bank of England's policy. So there was a bit of argy-bargy between those two. In the afternoon yesterday, we then had data out of the US, and it was their GDP figures which came out better than expected. You can see it came in at 3.1%, where the expected was 3%. However, the unemployment claims didn't actually come in very good, instead increasing by 12,000 from the previous week of 260,000. Throughout the afternoon yesterday, we also had a couple of US Feds making comments about interest rates, the Fed's dot plot, as well as US Treasury Secretary Mnuchin saying that the tax plan would pay for itself. So I guess that remains to be seen, as it has been promised for so long. Now, as you can see, the only red news that we have coming out today, 9:30, we have the current account, excuse me, we have the current account for the UK. That's coming out at 9:30 a.m. BST. So if you're trading any sterling pairs, beware. Then at 1:30 we have the Canadian GDP month on month at 1:30. Then finally we then have Bank of Carney speaking again at 3 p.m. So make sure you're aware of any high impact news before placing any trades. Also to note, traders, that today is the second day of the Bank of England's conference. So again, please make sure that you're aware of any potential speakers that may happen during this conference. If you're trading in sterling pairs, I've already mentioned that Mark Carney will be talking at 3 p.m. Also, other thing of note is that today is the last trading day of the month, so you do need to be aware that the big institutions do settle their books to close out the month. What does this mean? It means that we could see some unexpected moves today, so do ensure you have your stops in place and always make sure you're happy with your risk and don't have too much risk on the table. And of course, being the end of the month, that also means that next week we have the US non-farm payroll. Anyway, so let's go over to the charts. So we're looking at the dollar index. Price is currently trading at 92.95. I mentioned yesterday about the dollar index being in a steady downtrend, stalling, all the while having a COT extreme, which I've put in a box here. This blue shows for how long we've had the COT extreme. So a COT extreme long signal, sorry. We see weekly divergence formed at support, and then we have a big push up this week, breaking the highs of the previous 4 weeks candle, and this happened on Wednesday. It also broke through the 90. I just dropped down to the daily chart. You can see this. So we broke through the 93 barrier on Wednesday, and I did mention that if we were to stay above this level closing out the week, it's possible we may see a push up to the next resistance level around the 94 mark. However, you can see yesterday's candle, in the afternoon we saw that dollar retreat and it closed back below the 93 mark. Whether this is to do with the big guys' end of month book closures, we don't know. However, this level will be key, and we'll be watching this particular zone to see how the dollar responds and correspond with those levels on the other major and minor charts. Now, moving over to Euro, this is the weekly chart. Price is currently trading at 1.1794. Now, the inverse of the dollar index, we see a similar. Price is in a steady uptrend, halts at resistance. We see weekly divergence, and then a sell-off, helped some by the outcome of the German elections over the weekend this week. Now, on and off this year, the euro has had a COT extreme short signal, but didn't always materialize, due partly to the strength of the euro, but also to the weakness of the dollar. Now, we saw if I drop down to the daily, we'll see that price dropped, and yesterday we saw a bullish move on the euro. So how could we trade this? If you are a trend trader, then you would be looking for long positions, because the daily chart, you can clearly see higher highs, higher lows, is clearly in an uptrend. And dropping down to the 4 hour, you can see that a double bottom in this section here has actually formed. So being a trend trader, you could say you will trade from this level and take it up. If your bias is to the short side, then you would probably be waiting for some sort of a pullback, perhaps to this level around the 118.30 mark zone, and to take that short down again, or alternatively wait for support to break. Moving over to Swissy, price is currently trading at 0.9713. This is the daily chart, and we can see a clear level of resistance shown by this red zone here, and price hasn't closed above this level since June, due to dollar weakness, as well as the Swiss franc being used as a safe haven in times of uncertainty. So again, if you're a trend trader, you should have shorted from this red zone here, about the 0.9750 area. Moving over to the yen chart, price is currently trading at 1112.57. From this weekly chart, we see price consolidating in this triangle, and within this triangle we see a range. That price has been pretty much trading between this range, that's this red and green zones here. Now if I drop down to the daily chart, yeah, so the price has pretty much been trading between these resistance and support areas, which is about the 115 to 108 levels. Now with the dollar bullish move up, price tested and broke through this 113 level yesterday, however, and basically hit the 50 fib of this move from down here to the top. But yesterday again it failed to stay above, and we saw a sell-off in the dollar yesterday afternoon. We took an intraday position, which about this level here, and we got stopped out. So how can we trade this chart right now? Well, if you're a dollar bear, you would have sold at the top here once price failed to stay above the 1113 level. You would have seen price retreat and should have sold off and made some nice profits. Failing that, perhaps you would have looked at an entry around this 1112.50 level. We can see that price has actually pulled back to this level, so the opportunity is there again if you are a dollar bear. If you're bullish, then basically you'll want to wait for price to hit support and reassess. Moving on to cable chart. Price is currently trading at 1.3401. The weekly chart, we can see price is in a clear uptrend within a rising wedge. Price broke above resistance, fell to stay above, came back down to key 134 level, and on Wednesday there was quite a battle between the bulls and bears. And then yesterday, if I drop down to the daily chart, we then saw price break up above the 134 level, and we now see that price is, we now see another battle around this very same area. Price currently is at 1.3398. Now sterling is another currency where we've had a extreme short signal. I've marked these areas with these blue boxes, but as you can see, sometimes it's taken quite a while before we actually see a sell-off. Now that said, sterling does keep showing its resilience by rebounding. Again, some of this is aided by the weakness of the dollar. So how would you trade this? If you're a trend trader, you'd be looking to buy from this level, which is the 13400 level, looking for any bullish signals to take that long. At Phoenix Blue, we actually took a trade, I think, around the same zone on Wednesday. Some traders moved their stops to break even on Wednesday night, and others left stops intact and were able to hit target yesterday morning before we saw the push up in sterling. But we can see that there may be another opportunity to trade from this very level again. Moving on to the Aussie chart, AUD USD. Price is currently trading at 0.7840. Now this weekly chart, we can see that price is in an uptrend. We've got higher highs, higher lows. Price, we can see, pushed up and stalled at resistance, which is the 50 fib of this move. We can see that divergence has formed, and we see that we've had 3 weeks of seller candles. Again, the Australian dollar is another currency with a hot short signal, and you can see for this whole period, if I move down to the daily chart, this dotted line here in blue shows the period that we've had a COT extreme short signal. we can see for this whole period we have this signal that price has literally been trading within this range here, and we see a move down, a move up, and also a sell-off. So yesterday price tested the key 07800 support zone and was unable to break before bouncing up. We can see that a clear bullish rejection candle was formed yesterday. Now, if you are a trend trader, you could have taken this candle and you wouldn't have been triggered in as of yet anyway. If you're a dollar bull, then you'd be looking for any retracement, perhaps back to this 79.20 level, or perhaps even lower down, 78.80, and failing that you would be waiting for a break of support to take an opportunity short. Now moving on to the Kiwi chart, the New Zealand dollar is currently trading at 0.7216. Looking at the weekly, we can see that price is pretty much been up and down. On the daily, we can see that this head and shoulders pattern was formed, and price briefly broke the neckline and the 50 before pushing up and retesting the right shoulder. It shot up above but failed to stay above and came back down below the very next day, and has been trading within this range. So with Kiwi having been the weakest of the majors and minors against the dollar, yesterday we saw a huge turnaround. So price bounced off support at 0.7200. I had actually been looking to trade this. If we drop down to this 4 hour, I had been looking to trade this level here. However, an opportunity didn't arise yesterday, so instead we saw a bounce. So again, it's another level we will be watching here at Phoenix Blue. The last chart I want to look at is a dollar CAD. This is the weekly, stretch that out. This is the weekly chart for dollar CAD. Price is currently trading at 1.2425. We can see prices being in a clear downtrend. We see divergence has formed at support, and then we have 3 bullish weekly candles, assuming that this last candle by the end of today closes as it is. We also see that on Wednesday this key level of resistance come support was broken. This green zone here at 1.2400 level was actually broken, and yesterday price also briefly broke above the 1.2500 level before retreating. Now trend traders should have sold once price failed to stay above the 1.2500 level. I'll be watching for price to retest the 1.200 level with a view to take a long opportunity if this level holds together with dollar strength. However, should this level here break, we will be looking for opportunities to trade short back to the downside. So I mean, you can clearly see that the overall picture for all the majors and minors is based on the weakness of the dollar, with the dollar being so up and down recently, and also next week being the non-farm payroll week. Excuse me. It's also an idea, guys, to look at some of the cross pairs such as the yen and sterling pairs, which have also been offering us quite a few trading opportunities here at Phoenix Blue. So do your analysis on those charts, and if you have any questions, drop us a line and we'll be happy to help you. So that's it for today. If you would like to keep up to date with what we're trading or have any questions, or if we can help you in any way, then do send us an email, info@phoenixblue.co.uk. Also, make sure you do subscribe to our Telegram channel as well, because we do periodically post trades we do intend to take before we take them, so that you can also get in on the action. Okay guys, thanks for listening. I hope you've had a profitable trading month. Have a great day and trade safe.